Interest rates are up, big time. And if you don't know what that means, don't worry. But there are some places where due to this, you can earn a higher return for your money. Now, the most common is a savings account. However, today we're going to cover something a little different that will grow your money a little more. It's great for putting your rainy day fund or just your regular savings, and it's called a money market mutual fund. And I'm going to teach you everything that you need to know about it and how you can get them yourself. Let's get to it. Now, before we start this video, I would like to remind you that I am not your financial advisor. This video just shows my views and interest and should not be taken as financial advice. Let's get back to it. So, money market mutual funds. It's a lot of words, but let's break it down to the first part and the second part. So, money market just means that it's loans that mature within 1 year. So this makes them be very liquid, so it's very easy to buy and sell. It provides income, and also they're very safe. So primarily we're talking about treasury bills, CDs, or repurchase agreements, all things that you usually hear as being very safe. Now, where the mutual fund part comes into play is that instead of you going and buying those individual things, you're gonna buy one thing that has exposure to all of it. So think about it as a pie. Instead of you going and buying the individual ingredients and doing it yourself, you have someone else do it for you, and then you just buy one piece of it. So put it all together, and when you buy a money market mutual fund, you're putting your money into something that is very safe, but gives you a little bit of a higher return than your normal savings account. So just a disclaimer that all the pros and all the cons that I'm sharing today are compared to a savings account. So keep that in mind. Let me move here so you guys can see them. The first one is higher returns. If you open a high yields account with Capital One right now, it will give you 4.3%. That's compared to the funds that I'll share at the end that will yield around 5.1. Yes, it's not as much of a difference, but it is higher. Then, different than a lot of savings accounts that might require you to have a minimum of money or a cap on the amount of transactions that you can make every single month, that's not the case with money market mutual funds. The minimum for money market mutual funds is just $1, and you can put in or take out as often and as much as you like. Then the cost of having the money market mutual funds is actually very low. We usually say that you should have things below 0.75%, but the ones I'm going to show today are actually below 0.5%. And lastly, if you look at alternatives like savings or even CDs, which are certificates of deposits, those usually require you to have your money put away and untouchable for a few months or even a year. With money market mutual funds, that's not the case because there's no lockup at all. So you can have your money accessible whenever you want. The first con is called T+1. Which is just a finance way of saying that you won't get your money until one business day passes. If you want it on Tuesday, you will get it on Wednesday. If you want it on Friday, you won't get it until Monday. But if you're using this technique for your rainy day fund, like I said in my last video, one day should not be an issue. Also, this technique is a little more complex. This video will give you a lot of good information, but if you want to fully understand the product, you have to do some research yourself. The risk is almost close to none, but there is still a chance and a small possibility that you will lose all your money. And the reason is because your money that you put in, different than when you have in your bank account, is not insured by the FDIC, which is that little sign that you see when you go to the bank telling you that up to $250,000, you are safe. And lastly, volatility. In times like this where interest rates are changing, you are gonna see some increases and some decreases compared to your savings. But in the long term, the balance is gonna be pretty flat, so it's not gonna be a big issue. So to get into money market mutual funds, it's not like having a bank account where you put money and it has an interest that is gonna compound automatically. You actually have to buy the product. And to buy the product, you need an account that lets you buy it. So you need to open something called a brokerage account. Now, I don't get paid by Fidelity, at least not yet, but that's the one that I use, and I think it's best because it has no fees and minimums. So just Google Fidelity open brokerage accounts and you're gonna find the link, and it's gonna be super easy, super fast, and self-explanatory. Now, once you're there, you have to select which money market mutual fund you want to buy. These are the ones that I like the most because they have a good record of returns and also a very low expense ratio. And there's some of the biggest names in the industry, which makes it a little more safe. But maybe I forgot a fund that you really like, or maybe there's another topic that you want to see in the channel. Leave it in the comments and I'll check it out. I hope this video helps, and I'll see you next time. Peace.